The Nasdaq at the time of recording this video is down about 1.5% in after hours. What's going on and what do you need to know? How can this affect Tesla stock and where are we headed next in our markets? All of this and more. Hit the like button and subscribe to the channel if you find value out of this video, and let's get started. So we will talk about Tesla stock and if today's drop in the Nasdaq in after hours changes my thesis of Tesla's probably going higher from here. Now, I will tell you right now, it wouldn't surprise me to see Tesla outperform as the broader markets fall, meaning like you've seen in 2024, big tech went up and Tesla went down. It wouldn't surprise me if Tesla goes up and big tech goes down because the narrative has kind of changed around Tesla. But again, more on that later into this video. Clearly, what is having an outsized effect on the Nasdaq today is Meta. Meta is currently down over 16% in after hours. Meta's EPS comes in at $4.71 per share versus $4.32 per share as was the expectation. Revenue coming in at $36.46 billion versus $36.16 billion. So Meta beat. Across the board, they beat. And revenue actually increased 27% on a year-over-year basis. The problem here is the guidance. Meta said it expects sales in the second quarter of 36.5 to 39 billion. The midpoint of the range being 37.75 billion. That would represent 18% year-over-year growth, but is below the average analyst consensus of 38.3 billion. So in all reality, Meta guided down about $500 million. Now, if things are really bad, like on the low side of Meta's guidance at 36.5 billion, that could be a $1.8 billion revenue miss. But I mean, I'll let you guys decide down below in the comment section. Is a 16% drawdown warranted on a $500 million revenue shortfall? At least for guidance. And if you put this on a, percentage basis, it's minimal. It's like 3%. The problem has been, as I have explained here on the channel, Meta was trading at almost all-time highs heading into earnings. And there was basically nothing Meta could do to avoid a drop. I mean, last quarter, Meta pulled out the dividend card, the buyback card. They did all kinds of different tricks, if you will, to cause the stock to go up last quarter. There wasn't much Meta could do to really impress investors when the stock was at all-time highs and had severely elevated expectations. And this almost 17% drawdown in Meta here in after hours really just highlights how ill-prepared the broad markets are for this earnings season. Expectations are way too high, and this is probably not going to be the last disappointment. You also had other earnings as well today in after hours that are sending down AI stocks. SMCI is down another almost 4% in after hours. ARM is down 4.25%. Nvidia is down 1.5%. AMD is down 1.5% as well. And that company is Lam Research. They themselves are only falling about 2%, but it is a very thinly traded stock in after hours, and I don't think you'll know the full effect of that earnings until tomorrow morning. Here's what happened there. Top line revenue and EPS came in better than expected, but it was again the guidance for the June quarter. The company sees revenue of 3.8 billion, give or take 300 million, with non-GAAP earnings of $7.50 a share, give or take 75 cents. Street consensus for the quarter stands at 3.78 billion in revenue, which give or take 300 million could be way lower, could be way higher. You don't really know there. And profits on an adjusted basis of $7.30. So the figure they gave, $7.50, was better, but then they said give or take 75 cents. So maybe it comes in way short net for this quarter, Q2, or way above. You just really don't know. So that's kind of seen as like a lower guidance, or at least less confidence in where this quarter is going to be. And Lam Research is regarded as one of your high-flying AI stocks, kind of in the same ballpark as like a Broadcom. But this is definitely having a negative effect on AI stocks and after hours, and they already didn't have a great day, especially Nvidia, down almost 3.5% in regular trading. This report from Lam Research really didn't help much. You also had ServiceNow that basically beat across the board again, but came in with light guidance. For the current quarter ending in June, ServiceNow forecasts subscription revenue in a range of 2.525 billion to 2.53 billion. Analyst consensus estimate is 2.533 billion. So a little bit light, $50 million or so, a little bit less than that of a miss to guidance. Not a big deal, but in this environment, when stocks are trading at all-time highs, like ServiceNow, Lam Research, Meta, or close to all-time highs, that's not good enough. You got to come out and beat expectations on guidance by like 20% to justify your stock being at all-time highs. And unfortunately, that's probably going to continue to happen. As I have talked about in other videos, we have recently seen a bounce in the NASDAQ. You're now back above your 100-day moving average. If you hold this as support, that's fantastic. So far, you're not. Today in regular trading, you did, but in after hours, you're back below that. The NASDAQ represented here on the triple Q's QQQ, that's probably what you use to trade the NASDAQ. It's trading at $421.77. Your 100-day moving average is currently at $423.11. So you're technically sitting right about here, just barely under your 100-day moving average. Now, tomorrow is going to be the big day. Whether or not we actually continue to bounce or sell off and hit lower lows for 2024, it's probably going to come down to tomorrow. That's because tomorrow and after hours, you will hear from Microsoft and Alphabet. And unfortunately, they're set up in a similar situation as Meta. They've had really good earnings. They're trading at all-time highs. Unless they're able to come out and just wow investors, especially on that guidance, which seems to be coming in light for most companies reporting earnings, they're probably going to fall. Now, as far as what the markets are pricing in, market makers are expecting a 6% up or down move for Google, and Microsoft is expecting a 5% plus or minus move. So basically, Meta was pricing a 9% move. They moved almost 18%. If there's anything bad, it's possible Microsoft could fall 10%. It's possible Google could fall 12%. Or if they come out and wow investors, they could double that. Microsoft could go up 10%. Google could go up 12%. I'm just saying it's a lot harder, meaning the odds of these stocks going higher on earnings are a lot lower than other earnings season. But on that note, Google is down 3.2% right now in after hours, and Microsoft is down about 2%. Even with that fall, though, they're still sitting near all-time highs, like within a couple percent of all-time highs. Like if Google and Microsoft both come out and do the expected move that the market makers are expecting, 5% and 6% to the upside, that's going to be a new high. So even with this drop in after hours, you're still very close to all-time highs. I don't think it lowers the bar enough for good earnings to be good for the stock. In other words, I still think you need to wow investors, even though these stocks are selling off right now in after hours. So I think tomorrow we're going to know a lot more as far as where the NASDAQ is going from here. The NASDAQ and the S&P for that matter. If Microsoft or Google disappoint and those stocks fall, well, you're going to trend back down to that 200-day moving average. If not, just go there pretty quickly. Your 200-day moving average is sitting at $395.88. You have recently seen this, what was a 3-day bounce, and a pretty large bounce at that. You bounced 1%, then you bounced 1.5%. You were up a third of 1% today. So you effectively bounced like 2.8% or so in 3 days. That was a pretty good bounce. And now it looks like you're going to give that back. You did also reset the RSI. Now, what tends to happen is when indexes like the S&P and the NASDAQ get to 30 on the RSI, that seems to be a moment in which algorithms and market makers go out and aggressively start buying everything. Like if you get to 30 on the RSI, there better be a damn good reason why you're at 30 on the RSI, or the markets are probably going to bounce. And that's exactly what happened this time. You've reset that. Now the RSI is sitting at about 44. You do have more room to fall now. And sell-offs, unless it is the Rona, they don't tend to go straight down, right? Even take a look back at this 10.5% correction we had in the NASDAQ from July 19th through October 30th. You actually have 3 drawdowns and 2 rallies in this time, or 2 kind of, bounce backs that didn't quite get you to all-time highs. You fell, you bounced back. You fell, you bounced higher. And then you fell again. And then when you bounced, it was the end of that correction period. So I would expect things to be choppy on the way down here, but maybe this sets you up for a new lower low for 2024. Again, it's all going to come down to Microsoft and Google. I don't think Apple's going to save the day next week. I don't think Amazon's necessarily going to save the day because Amazon's in a similar situation as Meta, Microsoft, and Google, trading close to all-time highs with very high expectations. Apple's just going to be a crap show next week. Apple's looks like they're doing terrible. And Nvidia, sure, they could save the markets, but they're like 3.5 weeks away from reporting. So from now until then, yeah, I'm not very confident in the setup that we have here. Then again, maybe Microsoft and Google come out and just shock investors and do something crazy, give us an Nvidia-like report, but I think the odds of that are pretty low. And again, as I have said before, when the 10-year Treasury yield is sitting at almost 5%, currently at 4.65%, 35 basis points away from 5%, it doesn't make a lot of sense to take risk in markets when stocks are trading at all-time highs and elevated valuations, when you literally have a company like a Meta, Microsoft, whatever company it is, they have to do better than even the already high expectations. Like, come on. There's bonds as an alternative. Again, I will remind you, basically the only bull thesis right now is the economy is strong, people are spending money, that's going to drive earnings growth in the markets. When that is your only bull thesis, markets really lean on that, especially when stocks were trading at all-time highs, and still, they're pretty close to all-time highs. You're sitting on a lot of gains, and the markets have put all of their eggs in one basket. So even though earnings are coming in good for this quarter, expectations are next quarter's not going to be as hot based on some of the earnings we have heard from so far. Now, if the economy weakens a little bit, inflation comes in better than expected in the next inflation report coming in the second week of May, around May 10th. If the Fed's bullish on May 1st, well, that could create another bull thesis. Maybe Fed's gonna start cutting rates. Who knows? Inflation's falling. But as of right now, when all of your eggs are in the earnings basket, and that's the only bull thesis, and you've run this far, well, you need things to come in really, really good. You need a solid, solidified bull thesis to own stocks with these kind of valuations that markets are trading at. So does that mean markets need to collapse from here? Probably not. But should you see another 5% lower from here in markets? Maybe more? Possibly. I think it still is kind of undecided how strong the AI momentum is with your semiconductor companies, and we're going to learn more from Intel tomorrow in after hours, but really Nvidia is going to kind of either confirm AI is still doing fine or, well, not. And AI is maybe not growing as much as we thought. If you look at Nvidia stock over the past couple of days, the last week or two, you would say that maybe there's some fear growing in the AI trade, which could be a larger problem for our markets. But I don't know if that bubble has totally popped yet. There's definitely been some air that has deflated out of the bubble, but I don't know if it's popped yet until we get AMD or Nvidia earnings. But let me tell you, if the AI bubble really does pop, you're going to be looking at a lot more downside than 5 to 10% from here, in my personal opinion. But we're not going to know that for at least the next couple of weeks. As I mentioned in the last video, you are going to get some data coming out tomorrow. That is the GDP growth rate quarter over quarter, advanced numbers for Q1. You're expecting 2.5% to 2.3%. The forecast is 2.3%, consensus is 2.5%, so likely closer to 2.5%. And again, go back to the bull thesis. The bull thesis is not bond yields are falling, creating more, value to stocks, right? More appealability to stocks, a looser economy, a looser financial system out there. That's not happening. That was a bull thesis for markets. It's no longer a bull thesis. The Fed cutting rates kind of goes hand in hand with bond yields, right? Fed cuts rates, bond yields tend to fall. You don't have that as a bull thesis anymore. We're not expecting 6 rate cuts anymore, like we were during the rally of, really October through and the end of December. That's no longer a bull thesis. You no longer have the bull thesis of inflation is continuing to fall, which I think people forget. Inflation not only affects the Fed and what the Fed does, inflation also lowers the value of long-term earnings. So a growth company, let's say a Tesla, they're like, we're going to have all of these profits in 5 years from now. If inflation's 2% a year, okay, that's easy to say, hey, 10% of your long-term earnings, we're going to discount that now because that's going to be the rate of inflation. And then you have all these other things that get thrown into models like treasury yields and all kinds of different things, economic activity, bunch of blah, blah, blah. Okay. Long story short, if inflation's 5% a year or 5% for 2 years or 3%, that changes the long-term valuation of growth stocks. And that's why growth stocks underperform typically when inflation is higher. Now, if economic activity starts to fall, maybe some of your growth stocks start to do better because the Fed starts to cut rates. And if there's a lack of growth in the economy, then maybe investors go towards growth stocks. That's really a topic for another video. But long story short, the point I'm trying to make is you don't have any other bull thesis here. If GDP starts to come in bad, or if economic data starts to come in bad, you might think that's good for the markets, but the markets would sell off fiercely if GDP comes in lower than expected tomorrow. Maybe less than 1%. I don't think that's going to happen. But if it did, and when it does, stocks are going to sell off big time. Just let me put it to you like this. How strong do you think the markets would be if we were teetering on a recession? Not that good. Okay, stocks would be much lower than where they are today, no matter what inflation's doing. Consider inflation still running red hot like it is now. Now, all of this is very important to understand because what we're going to talk about next won't make a lot of sense unless you have a broader perspective on what's going on in our markets right now, because Tesla could actually outperform the markets big time and to some degree inverse the markets over the next couple of days, and I want you guys to be prepared for that. If indeed you do see a sell-off in the markets that is earnings driven, it's not the AI bubble is deflating, it's not GDP numbers coming out bad tomorrow, it's not a slick comment from some Fed official or geopolitical tensions. If kind of Meta sold off, markets sold off, big tech sold off. If big tech continues to sell off, in a weird way, it could actually be to Tesla's benefit. Because remember, in 2024, big tech has done well. It's been trading at all-time highs. If not, I think 2024 was almost a record of new all-time highs set for the amount of stocks in this long of a period of time, especially for the S&P and the NASDAQ. This year has been very historical on a lot of different standards, and it's mainly been driven by your big tech stocks. Well, check it out. If Tesla has went from, decent numbers, whatever, years ago, down to the trough, and markets are like, hey, things are going to get better from here, and 2025 is going to be better than 2024, then that gives you the expectations of earnings growth accelerating when expectations are very low. That's exactly the opposite of what is affecting big tech stocks like a Meta. Meta is seen as, hey, earnings have been really good. Now they're starting to not be so good, or at least forward expectations. And that's problematic for those stocks, but could be to Tesla's benefit. Because when Tesla is seemingly the only big tech stock out there so far in this earnings season that maybe already went through the pain and now is on the recovery, it really puts them in their own specific spotlight. Consider as well, short positions are at multi-year highs. A lot of retail has sold, a lot of institutions have sold, and maybe they were just shown like we probably shouldn't have sold because maybe Tesla is actually listening to shareholders. And I think that's important as well. A company that listens to shareholders, that tries to actively create more shareholder value. Think about what Mark Zuckerberg did in 2022 and 2023. That can be very powerful. And again, especially with a stock like Tesla that has had so many bad earnings in a row, and now it's like, hey, Tesla's doing better. If big tech sells off, considering how bad Tesla's done in 2024, it wouldn't surprise me if people say, hey, Meta's selling off. Maybe Microsoft and Google are selling off tomorrow after hours, let's say. Maybe going into Tesla makes some sense. It just had really good earnings. And I think that is also another force at play that could help Tesla stock. And again, you do have a 10-year treasury yield at 4.65%. If you do get bad economic data or slightly worse economic data than expected, there is a lot of room for 10-year treasury yields to fall, which could also benefit Tesla, whereas it really doesn't benefit your other big tech stocks because they don't raise capital. Their consumer base is not dependent on the lending rates out in the economy. So for those reasons, I think Tesla stock can continue to do well from here. And I think you're actually seeing that in after hours. Tesla was up 12% today. It's common. It's expected that you would have a minor little pullback in after hours regardless of, you know, what's going on in the broad markets. But Tesla's not falling big, at least not right now at the time of recording this video, based on a huge drawdown in the NASDAQ following Meta's earnings. This is kind of confirming to me that Tesla's probably going higher from here. So I do think today's drop in after hours really could just benefit Tesla. I don't think Tesla's odds of a continued rally have gotten worse. I actually think Tesla stock is still heading back into the 180s over the next week or two. Now, I could be wrong. I would profit a lot if that happens, so take that bias into consideration, but I think it's kind of telling you that based on the slight drop you're seeing in after hours relative to other stocks. So let me know what you think about this information down below in the comment section. Emerson, does that sound right to you? Does that sound right to you? Tesla stock going higher? Does that sound right? Yeah? I think so. I think he thinks so. Look at him. Does he think so? I think he's pretty bullish. Are you bullish? Are you bullish? I think he's bullish. Okay. Well, nonetheless, guys, let me know what you think about this information down below in the comment section. If it makes sense to you, if it doesn't, if you're confused on something, I'll try to do my best and answer any and all questions down below in the comment section, because I do think following a drop like this in the broader markets, a lot of people are going to be questioning whether Tesla stock's just going to fall back down again, and I don't think that's the case. Thank you for watching. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.